You know what? I'm going to tell you something about building generational wealth. Building wealth is hard. I'm not going to lie to you. Building generational wealth takes behavior change. There's 5 things that I call the Dillard method that will allow you to build generational wealth. But you have to take time and be patient to let the process play out. You see, if you're trying to plant an apple tree, if you put the seed down today, do you expect apples to grow tomorrow? You don't. That's the same thing when it comes to your money. You have to plant seeds today and let time continue to allow your money to grow. It's called compounding interest. But here's the first principle out of 5. The first principle out of 5 is this. You have to get life insurance. 30-year term life insurance is what I like to buy. You're age 25, you're nice, young, nothing can happen. You fall, you trip, you just have a small bruise, you get up and keep on ticking. But when you're age 55 and you fall down, oh no, life is different. This is why you need to buy your life insurance early. Age 25, get a 30-year term to age 55. Also, when you're 45, go ahead and re-up and add a little bit more. So you're just adding policy upon a policy as you get older. But the most important thing is, would you rather pay $50 a month for $1 million policy when you're young? Or would you wait till you're age 50 and you really need it and you're paying $300, $400 a month for the same policy? Buy it while you are young. Number two is very important. Investing in your 401k, because guess what? They say if you put in $200, they're going to put in $200. So now you got $400. But imagine if you're making $40,000, you put in 5%, which is $2,000, and then your employer puts in $2,000. You got 100% rate of return on your money right away, not to include the compounding interest. That's right, money making money. Number 3, interest. High interest debt, you got to pay it off ASAP. If you continue to make the minimum payment on those high interest credit cards, if you're age 20, you're going to be age 50 by the time you get done if you're making 2% the minimum payment. You don't want that, especially if you're age 45, paying until 75. That don't make good sense. Number 4, everyone likes to save money. So the government is saying if you put money in an individual retirement account, they're going to give you a tax discount for most people. Who would let go of a 10%, 15% discount when they're spending $2,000, $3,000, $4,000, $5,000, $6,000? I don't know about you, but I like to keep my money and save as much money as possible. Next one, very important, the child inheritance, child savings account. You need to make sure that you open up a child savings account for your child when they're 1 year old. Put money in the bank for their birthday, $50, $80. Next thing you know, they're age 18 and they have money in the bank saving, and then just let the money compound and compound. And then they will end up with $300,000 in the account so that they can relax. That's how you build generational wealth. For more information, for me to break it down, I have another video. I go more in depth to help you build generational wealth.